Hi, guys. Welcome to another episode 3 of the CCG podcast. It is January 19th, 2018. Before we get started, I do want to talk about and give you an update on the Capital One situation. So it seems like I said in our last podcast, that they did go ahead and send me emails that they were pushing my transactions through. But unfortunately, they haven't gone through yet. They're just sitting in pending status. So I'm going to keep an eye on that and keep you guys updated. But without further ado, let's go ahead and get into the news for the week. Illinois embraces blockchain. So legislators in Illinois are trying to make legislation that would help the state welcome what some in their ranks see as an innovation. Representative, and I hope I say his name right, Jamie Andrade, stated that New York went in and overregulated Bitcoin, and what ended up happening was a lot of these companies left the state. So Illinois has been progressive, as it is the home to the city of Chicago, Frank Sinatra's kind of town. It's known as the birthplace of jazz, and was the first state to use electrical streetlights. So it's no foreigner when it comes to technology and technology advancement. But the House Senator Andrade, I really hope I'm saying his name right, went on to say, "I think we will be able to make sure we protect the consumer, but at the same time we work with the companies and all the other organizations to make sure the state of Illinois is an inviting environment for the type of technology." I think this is a great thing, especially for people in Illinois. As these states, one by one, start adopting blockchain technology into their legislature or into their governments, we're going to see a wide adoption of blockchain technology. Let's also not forget Chicago is also the home of the first Bitcoin futures contract. So that was huge. All right, moving on. Kraken went down, the Kraken exchange this week. Kraken, the fifth largest cryptocurrency exchange, resumed service earlier this week after a scheduled maintenance that was supposed to take 2 hours ended up taking 2 days. So the unexpected long downtime really irritated many of its users, since not only was the trading halted, but so were withdrawals during the downtime. To make things worse, during their downtime, the coin prices went on a drastic decline, and due to news coming from South Korea. And at that time, the people that had their coins in Kraken's exchange weren't even able to trade them or pull them out. All right, let's move on. BitMine looking to expand to Canada. Now, we did talk about this last week, how Canada was opening hydropower to Bitminers out in China. Well, a few days after announcing a new branch in Switzerland, China's mining giant Bitmain Technologies decided to look to expand once again, and this time in Canada's Quebec province. Are we surprised? We shouldn't be. Bitmain is looking at potential mining sites in Quebec and has already begun discussions with power authorities. Quebec has become an attractive location for new Bitcoin mining facilities, and the region has excessive cheap hydropower to offer tech companies. Along with that, the country's colder environment is really, really perfect for the longer lifespan for the ASIC machines which companies use to mine Bitcoin. Moving on, Dallas Mavericks accepting crypto. What? Yep, you heard it. The Dallas Mavericks, for those of you who don't know who that is or what that is a U.S. basketball team, will begin accepting cryptocurrency payments during their next session. This was according to the owner and investor, Mark Cuban. Cuban was asked about possibly paying for tickets with crypto on Twitter earlier this week on Tuesday, to which he replied, "Next season." In a follow-up comment, Cuban confirmed that the news that the team would take Bitcoin and Ethers, as well as probably and possibly some other currencies. Now, this Wednesday, the first blockchain ETFs launched, both on NASDAQ and the New York Stock Exchange. Realty Shares Advisors and Amplify Trust ETFs launched the first blockchain-based exchange-traded funds, or ETFs, on the NASDAQ and the New York Stock Exchange. Both funds went live on their respective exchanges at 9:30 a.m. Eastern Standard Time. Reality Shares, NASDAQ Next Gen Economy ETF, which has the the initials BLCN, opened at $24.20, while Amplify's transformational data sharing ETF, BLOK, started closer to $20. Both ETFs will be exclusively investing in blockchain-based companies. Now, when the prospectus was filed in November of last year, the companies noted that investing in blockchain startups could be risky, but they also noted that the funds would only invest in companies with a market capitalization of greater than 200 million and which had a 6-month daily trading average of at least $1 million. In other news, BitConnect closes its doors. So many in the digital currency, cryptocurrency community have called BitConnect a Ponzi scheme, including Ethereum's founder Vitalik Buterin. Interestingly, this week BitConnect shut its doors, claiming that two cease and desists that they received from Texas and North Carolina were one of the few of the plethora of reasons behind it. The other being the multiple DDoS attacks that it was facing. Now, the accusations of it being a Ponzi scheme were based mainly on the multi-level referral system and the promise of up to 40% earned in interest, plus a daily bonus of up to 0.25% on each loan. The promise of risk-free high returns is, let's be honest, usually more than often not a sign of it being legit, but more of a scam. So if it sounds too good to be true, guys, it probably is. Now, I have to mention here that there were a ton of YouTubers out there taking advantage of their followers, and I'm not afraid to name a few of them who were shouting out how great BitConnect was and even belittling those of us who were calling BitConnect out on their claims. As of now, those YouTubers have not even apologized to their viewers for misleading them. But what they did do, interestingly, was they took down the videos off their channel with them talking about BitConnect and praising BitConnect and its services. I'm going to feel fortunate enough that after taking a deeper look into BitConnect, I was interested in it and thinking about investing, but I won't invest, I won't do anything, or I won't put my money in any place that I don't do my research in. So I just didn't trust it after all the research for some reason. So I just didn't invest. But I do feel really horribly and honestly sick to my stomach for those who put their hard-earned money in, believing it would be a sound way to increase their wealth. All due to a few YouTubers like Trevon James, Crypto Nick, Craig Grant, and Ryan Hildreth who took advantage and literally, seriously, took advantage of their viewers for their own selfish reasons. If you're subscribed to any of these guys, honestly, guys, unsubscribe and save yourself from being a victim of their next scam. And as always, I can't emphasize this enough. This is why we keep saying this at CCG, the Crypto Coin Guru. Do your research. Do your due diligence. And please, please, please do your research and invest wisely. All right. Enough said about that. Moving on to bigger and better things, Colorado introduced a new bill to adopt blockchain technology. So a new state bill was introduced in the Colorado Senate, which is looking at using blockchain technology to do what? Secure private data from cyber attacks. That's right. The bill was introduced on the 16th of this month, suggesting that using a distributed ledger would eliminate the need for paper records and in-person updating of such data. The blockchain system would solve the state's existing data collection and retention issues and create a more secure record. Now, if passed, the bill would direct Colorado's Chief Information Security Officer to evaluate the costs and benefits of using this technology and to determine blockchain's capability in handling cyber attacks compared to the traditional computer systems. Just so you know, in 2017, according to the bill, there were somewhere between 6 to 8 million attempted breaches of the Colorado state government's digital platforms per day. Now, many of the records kept by the government are unsecured and, quote, valuable targets for identity thieves and hackers with the intent to steal or penetrate corporate records, end quote. The bill went on to note that there is an increased number of threats to steal personal information. Now, in addition to this, the bill pointed out that Colorado currently still requires citizens to visit state agencies in person to modify their information. Now, this would be a pain point that would definitely be solved by this blockchain integration system. Moving on to Ledger. Paris-based cryptocurrency hardware wallet manufacturer Ledger has announced today it raised $75 million in a Series B funding round, led by venture capital fund Draper Aspire. The company says this investment will be used to significantly scale up its operations to answer growing market demand. Now, this is great news for anyone and everyone that has been trying to get their hands on a hardware wallet like the Ledger Nano S. A lot of people have been finding retailers to be completely out of stock, and then when they run to Amazon to check if they can purchase it there, they're finding out that prices have been drastically inflated due to the short supply. So hopefully this will fix that. Moving on to South Korea. Guess what, guys? South Korea officials caught inside trading. Surprise, surprise. At a meeting of the National Assembly's committee yesterday, on January 18th, the Financial Supervisor Service, FSS, confirmed that some employees invested in cryptocurrencies and sold them just before the government announced crypto regulatory measures. Now, even the government officials are trading crypto while trying to regulate it. Talk about ballsy. The FSS advised its employees to refrain from trading cryptocurrencies, stating that, quote, if the supervisory officials engaged in speculative transactions, it will be difficult for the public to understand ethically, or difficult for the public to understand ethically why trading cryptocurrencies is being regulated. Let's be honest, crypto isn't going anywhere. It seems as though that the more governments try to restrict it, the more they realize they can't, or how difficult and costly it will be to even try to restrict this. But for some better news, thank you, Alexander Lukashenko. Again, a difficult name. Hopefully I'm not butchering it. Now you may be wondering who this guy is. Well, he's the Belarusian president who signed a decree, get this, that legalizes cryptocurrencies, coin offerings, and smart contracts. Now, the decree will go into effect this March, to be precise, March 28th, 2018. Cryptocurrency activities are not restricted by the decree and will be tax exempt until 2023. Maybe other countries need to learn from Belarus. Now, the decree entitles legal entities and individual entrepreneurs who are residents of the High Technology Park, or the HTP, to perform operations with tokens, including cryptocurrency. The HTP is a special economic zone with a special tax and legal regime in Belarus. Its equivalent is Silicon Valley in the US. Some more good news. Virginia Beach government is backing Bitcoin mine creation in the area with a $500,000 grant. That's right. They say it's to create jobs, but we're seeing states all over the U.S. allow and adopt blockchain. The majority of resistance we're seeing is from the federal level, and that too in sectors where banks are doing the lobbying. Capital One. As you can see, I'm still a little irritated by Capital One at the moment. Now, let's keep going with the good news. St. Louis Federal Reserve reps, guess what? In favor of cryptocurrency. Alexander Berenstein and Fabian Schar of the Federal Reserve Bank of St. Louis have recently published an article that emphasizes many of the benefits of cryptos, or cryptocurrencies to be exact. The article states, quote, the crypto assets are well suited to become an important asset class, end quote. Now, in addition to offering praise regarding a number of the major applications associated with technology, first states, now churches. What? Yeah. As we move on, we're seeing it. That's right. You heard it. ICF Church, an evangelical church in Zurich, Switzerland, is set to begin accepting Bitcoin donations from its parishioners. All right, guys. This is unbelievable. The news keeps getting better and better. So this morning, contrary to millions of fear-mongering reports by the mainstream media and even by trusted news outlets like Reuters, Bloomberg, CNBC, and so on and so forth, South Korea will not close crypto exchanges. In fact, according to the chairman of South Korean Fair Trade Commission, Kim Sang-jo, closing exchanges is quote-unquote impossible in reality. As if you'd assume they'd know that already. So it was reported earlier today that he said this in a CBS radio interview. So Fear no more, and crypto on, guys. And finally in the news today, Portuguese bank Santander Toda backs down and allows Bitcoin-related transaction. Capital One. Just saying. Man, this news sounds so familiar. Earlier this week, Portuguese branch of Spanish bank Santander, Banco Santander Toda, was blocking Bitcoin-related transactions. The financial institution was blocking the transactions while, get this, claiming cryptocurrency exchanges were transacting in non-regulated financial products. Exactly what Capital One and a few other big banks are saying in the US. Following a backlash, the bank has seemingly backed down and is now processing these transactions. Santander Toda was blocking transactions to and from popular cryptocurrency exchanges like Bitstamp and Coinbase. Though in the US, you can take your crypto and put it into fiat and transfer it into your bank, but you can't take your money and put it into fiat. Kind of shady. An employee even revealed that existence of an internal directive to block transactions using Coinbase's IBAN was passed around. So, saying this, I do want to say that, guys, if your bank is not allowing you to participate in investing or moving your money around in whatever legal means you so wish to do so, file a complaint. File a complaint with the Consumer Protection Financial Bureau. And honestly, change banks. Don't let a bank hold your money hostage. So what we're going to do is we'll provide a link where you can file complaints to the CPFB, as well as a recommendation of a bank that I moved over to, and I've found that it is so much easier and faster to transfer my money back and forth, not only to people to pay bills, but into crypto exchanges. And we'll provide that in the link below. This video, as well as when we post it on the Crypto Coin Guru website. What can I say? File a complaint if you have a Capital One or a Capital One 360 account or any other bank that is doing this to you. Other than that, all I can say is so far, anything that I am transferring over using this new bank, my transfers that are going to GDAX and Coinbase as well as other exchanges are happening much faster than they did before. These are things that just make you go, and they just make you wonder. These banks are really trying hard for us to not decentralize currency. Because who does it hurt? It hurts the centralized banks. But anyways, guys, I'm going to stop the podcast now. I don't want to go beyond the 20-minute time frame. We'll keep updating you as things come by. If you want to learn how to read graphs, if you want to learn how to do technical analysis, you want to learn just the 101 basics of cryptocurrency, or anyone in your family, friend circle, coworkers that is interested in investing in cryptocurrencies, please do them a favor. Send them a link to the podcast. Send them a link to the website. Our main goal is to help people out. And join the members section. We're starting out this 101 Crypto 101 area for the members, where we're going to teach you how to look at these charts and graphs, how to evaluate if making an investment is a good investment or a bad investment. And not only that, we're going to talk about altcoins. And not how you find on YouTube, like, oh man, altcoin 1 is going to the moon, and then the next day, altcoin 2 is going to the moon, and then the next day, altcoin 3 is going to the moon. Because honestly, who cares if the damn altcoin is going to the moon? What we really care about is talking to you about what the white papers say, translating those into simple English, telling you what the technology is. Because guys, don't invest in the hype, invest in the technology. And if you invest in technology, eventually you're going to make money. But what you're doing is you're supporting an advance in technology. You're supporting an advance in a change for the betterment of banking and security and blockchain as a whole. So like I said, don't follow the hype. Don't follow where you're going to make the quick buck. Talk about where the changes in technology are going to come. And that's where the money is going to be. It's going to be a long hold. It's going to be like a 3-year, 4-year, 5-year, 7-year, and even some that I'm looking at holding for 10 years. But you know what? As you're hodling, as you're holding, you're making money. But what you're really doing is you're really believing in a technology. You're investing in something that you are really understanding and you believe in. And that is the only way to do it. All right, guys, we're going to call an end to this podcast. Another weekly podcast is in the can. CCG signing out.